Now, in this topic, I discuss the application of family trust and self-managed super fund in Australia tax planning. My qualification, including Bachelor of Commerce, Bachelor of Law, graduate diplomas in Commerce, and graduate diplomas in Legal. Now, we all know now the ATO introduced the Control Freight Corporation and require of engaging in general business activity when we use offshore entity to ship the profit to low tax jurisdiction. Now, this poses some challenge as increased the cost to use the offshore entity, and the cost may outweigh tax benefit. And there also is risk to breach Part IVA, tax avoidance law. Now, why ATL do that? Because they try to eliminate tax avoidance. They require arm's length transaction and avoid the entity to ship profit to low tax jurisdiction. Now, in this case, what's our response? We have looking for a way to make our tax rate is lower than the current 25% company tax rate. Now, we knew that a trust capital gain tax for asset hold more than 12 months, you have 50% discount. Therefore, a trust is a good entity to hold asset. And next one, we're looking for the lower tax entity, which is super fund. Say self-managed super fund, the tax rate is 15%. And each year, each member can contribute up to $30,000 to the fund, only incur at 15% of tax payable to ATO. On the right-hand side, we look at the Australia resident tax rate at 1224 to 1225. We absorb it from 0 to 18,200, and no tax payable. From the income from 18,200 to 45,000, we're paying 16%, which is really close to super fund. I would like to use that because this amount of money I can use straight away. Unlike the super fund, I got to live there until you reach a preserved age. So what's our transaction structure? We recommend it to set up an ABC discretional trustee Pty Ltd to run the business, generate income. And the ABC trust also hold rental property, use it as a negative gearing to offset his income. And whatever income after the negative gearing has become the income to distribute to the beneficiary, including member of the family and the super fund. Now, in this case, let's assuming the ABC discretionary trust have 6 individual beneficiary and 1 self-managed super fund beneficiary. The 6 individual could be grandpa, grandmom, father and mother, son and daughter. They should all in the working age or have earned work income to entitle them to contribute to the self-managed super fund. The distribution. We knew that the ABC trustee could distribute $18,200 for each member, tax-free, 6 of them, which total will be $91,000. Furthermore, from the amount is from $18,200 to $45,000. The 6 of them will be $160,000. And for this amount, the tax payable is only for 16%. So actual tax payable is $25,700. $27. Even the distribution will come to $250,000. So it's slightly about 10%. Next, the ABC still have surplus, has not been distributed. We could not leave this fund to the trustee. Otherwise, he's going to pay a 45% penalty rate. So we're going to distribute this amount to the self-managed super fund. So we have 6 members. Each member has $30,000 retirement. Total, we can distribute them $180,000 and pay 15% tax on the distribution. So it's $27,000 for the $180,000 we distributed. That's a bit high, but compared with the next level of tax was 32%, is much better. Now we come to the expect result in 1 year, see what happened. Now the ABC Trust, we use it as a cash cow. The running business generate taxable income, and also provide a vehicle, a computer, thus use business equipment, and possible extend to provide property to the member. Now, because it's negative gearing, we're assuming it's got a negative income for $70,000. And we see total taxable income for the trust, let's say $501,000. Our purpose to make the trust not pay any tax on it. Look at the member. The member received $45,000 from a trust distribution, each of them. And they use trust vehicle, a trust computer, and a trust property. So the actual money to come out, the outgoing is quite small, supposed to be covered by the $45,000. But if not, we can make arrangement to let the trust to lend the money to the beneficiary. Now, each beneficiary will pay income tax of $4,288 for the $45,000 received from the trust. The next money for the trust distributed is to the self-managed super fund. The self-managed super fund is used as a wealth accumulation vehicle. It received $180,000 from the ABC Trust, minus 15% tax, so the net income is $153,000 can be used to invest. So we're going to invest the $153,000 self-super fund into index fund. For example, was AXX 200 fund. The reason of that, because the index fund is often outperform of active management fund because lower management fee, and it's quite difficult to beat the index. And we knew that whatever fund, the self-managed super fund received from its investment, it's only paying 15% tax within the fund. So it's also quite low. Now, we're not looking for 1 year, we're looking for 10 years and see what's the result. On this table, we can see that we have 2 wealth accumulation vehicles. One is a trust by holding the investment property. We're assuming in the beginning, the property is worth $2 million. Borrow rate is 7%, rent is 3%. So it's 4% loss every year will be offset by the trust income. And we're assuming the property grow up 7% a year, and at the end of 10 years, it will reach 3.93 million. So less the borrowing fund is $2 million. So the wealth accumulate is $1.934 million for the investment property holding by the trust. Now we're looking for self-managed super fund. The assumption, the index fund is grow up 8% a year. and hold fund for 10 years, we never sold it. And wealth accumulate to 2.55 million after the 10 years period. Now we look at the cash flow analysis, see how much we actually make and how much we have to pay tax, how much we have to pay the member, and see what way the tax on our total income. Now we know total trust earning in 10 years is 510,000 times 10 years is $5.1 million plus. The tax paid by the member after the receipt distribution is 257,000, and tax paid by the self-managed super fund at tax rate of 15%. The super fund paid $270,000, and the member receipt distribution tax-free is $407,000. So net wealth accumulated is increased in value for the trust held property and the accumulated wealth of the index fund investment, total $4.48 million. So we knew that at the end of 10 years, we got 4.48 million plus 400,000, so it's about $4.9 million. And our total earning is only 5.1 million, so about $200,000 is actually paid to tax, knowing the time value of money. We come to the next slide. Total income 5.1 million. We made total tax 527,000 tax we pay. So actual tax rate is 5 to 7 divided 5.1 million at 10.34%. But it's not pay a true picture because the additional benefit involved. As you see that the trust, we make any purchase use before tax money. This purchase is deductible for the trust and be used by the beneficial. This advantage is not available for a wage earner. So I discussed part 3, tax avoidance provision and caution. See, is any catch when we implement this strategy? Is there any risk to trigger Part IVA, tax avoidance provision? It's no. Why was that? Because those strategies are widely used and widely accepted, but they feel caution, such as super fund. The 6th member must certify what tax for the trust to make super contribution on their behalf. And second, sole purpose tax that's relevant to the index fund investment. The self-managed super fund must certify sole purpose of providing retirement benefit to its member. They also have limitation. Asset to super fund is restricted to the person when they reach preserved age, currently anything between 55 to 60. The next one is assumption are not how true. We made assumption for the property increase in value and the index fund increase in value. And this assumption might not hold true because historical performance is not an indicator of future return. Thank you for watching. Please leave your comment. So on the following video, I will produce video for minimum tax using offshore entity and asset protection use offshore nest trust. Also, produce video asset protection use company and this is structured. Currently, the YouTube education channel are operating to provide education on legal, accounting, mathematics, financial modeling, data analysis, APP, website develop, as well as property development management. Any topic you might be interested in, you can leave on the comment. Thank you. Please leave a comment for channel improvement.